Up, everybody? This is David here with Anarchic Market. Anarchic Market. Um, this is going to be your source of culty technical analysis, the best kind of analysis, right? Screw those fundamental analysis nerds. Everybody loves technical analysis for some reason, and I am unofficially affiliated with the cult, meaning I have just been a watcher and a member, if you will, for well over a year, maybe 2 years, something like that, year and a half or something. The point is, Josh doesn't know about this, and we all know Josh isn't the hugest fan of technical analysis, right? And it's important to see everything with open eyes, right? You shouldn't live and die by technical analysis or really any one analysis, right? Just be open and be perceptive, be a critical thinker, a problem solver, witness the data and the information in front of you and use it, right? Don't live and die by any one thing, but just, don't ignore information that's in front of you, right? And in this case, what we are going to be looking at here are trend lines. I know this page looks a little wacky and a little busy here, but we'll break things down. I did another video. This is a very new channel, so if you could, please subscribe, hit the little ding-a-ding bell, all that good stuff. Hit the thumbs up, thumbs down, I don't give a fuck. It's engagement, okay? I did a video on Wednesday, I believe it was, ironically enough, right before Bloody Thursday, this activity right here. I am on a 2-hour candle time frame. Sorry, Josh. On TradingView.com. I'm not affiliated with TradingView, but they can give me money if they want to. I'll take it. Give me monies. I'm using a CFD instead of the traditional futures because on TradingView.com you can, it's kind of a hack, kind of like a little workaround. You can use these CFDs and they give you up-to-date information. If you just try to type in, ES, what is it, 1 exclamation point, whatever it is, to see the futures for S&P 500, you'll see a little thing up in the top right corner here saying delayed by, I don't know, 15 minutes. It's been a long time since I've looked at that, so I can't quite remember, but this is kind of a workaround. This gives you up to the second information, and it's exactly like the futures, so you can chart it out. I use it for charting purposes because it's so much easier to roll back in time and see things on a bigger scale than Thinkorswim. I do also use Thinkorswim because there is a huge amount of data in there, especially options data, statistics, probabilities data, that is very just invaluable. So that's not to say that I use this exclusively. I just like to chart on this, especially when it comes to trend lines, things like that. As you can see, I've been using trend lines. This isn't my only chart, but I've been using trend lines to organize the activity of the S&P 500 index for sometimes since like 2018 or so. I've been trading for a few years. I now trade exclusively. My wife works still. She works from home, but this is my job, so to speak. Not to flex or brag or anything. I'd be making more money if I just stayed at my old job. So this is not any sort of flex. If you'd like, what we want to look at now is an update from my previous video, which was on Wednesday, which stopped, ironically, right about there, right? We were on this last trend line here on Wednesday when I made a video saying, we either bounce or we run through, right? And so I had kind of a heads up early on the activity that was coming on, Thursday, Bloody Thursday, right? Excuse me. And I didn't know, we were going to be moving down 5-6%, whatever it was, right? I did not know that. But I knew that we would be making a decent sized move down, maybe anywhere from 1-2% is a good guess, right? Just based on previous activity. All right, well, let's back up, right? Let's show you how I've been using these trend lines. This probably looks like kind of a mess, right? We've seen since the drop in the global health situation, right? I don't want to use the real word. YouTube will, they don't like that. They'll spank me. Since we've seen the drop from the global health situation in late February, ending right around, what was it, March 23rd, right? We've seen a rising wedge, right? Rising wedges almost always break down, right? And this is why I say, like Josh says, right? It's important not to get overly attached to technical analysis, right? The market can do whatever the fuck it wants to do, okay? It does not have to do anything. We were just talking about likelihoods, right? It is more likely that a rising wedge, in my opinion, will break down. It did not in this case, right? Well, it did, but then we just continued to follow the bottom side of this particular trend line, right? When I do these trend lines, don't overthink it, right? Like most things in life, keep it simple. I see you'll get it from experience, right? And so now I don't really even need these trend lines on this chart, right? I can see this stuff without actually drawing a line. It just helps. It's visual aid. I see 2 points lining up, right? And we're talking about in time here. So hold on. Like in this case, right? I'm seeing, this is before all this transpired, right? So I'm seeing this, and I'm just lining up these 2 points. Will we get another touch later? I don't know, right? I don't know in the moment. And for a while, you feel like a complete imbecile, right? And you may get trend lines that are bullshit, right? And they don't get confirmed later. Just delete them. Just delete them. There's an art to this, and with experience, you'll get better, and you won't have just insane lines everywhere on your chart, right? So here, we saw these 2 points connecting, and then a blow through. Well, at that point, you're thinking, well, maybe that trend line's not right. But then what? We had a retest. So that's important not to delete your trend lines too early, right? And I'll show you another example of that. We had a retest here, almost here, but here, here, and here again, right? So now we know, okay, this is not bullshit anymore, and then shit, maybe I'm wrong, right? Maybe this is just crazy, crazy, crazy coincidence, right? I don't think that's very likely. Let's just face the facts, right? There seems to be some acknowledgement for whatever reason. I don't know why, right? I'm not going to go into the psychology of this. That's way too deep of a subject. For whatever reason, the market seems to acknowledge these trend lines. You can see this one here, retouching there, retouching there, retouching there, right? Is that a coincidence? Shit, maybe. Maybe I'm an idiot. But all I know is these lines can help me make judgments, right? Instead of wondering as the market kind of drifts along, should I buy, should I sell, should I get out of this position, do this or that? It just makes things a bit more mechanical. It helps me say, above this line, yes, below this line, no, for example, right? So we broke through that rising wedge. And at that point, I actually thought we were going to head down like almost everyone on the internet, right, and on YouTube. We did not head down. We continued to ride the bottom side of that. Well, that happens sometimes. In fact, that's happened in the past before the breakdown, the big, big drop. We saw activity similar to that. Well, here are another 2 points. Cool, I'll just connect those, right? It sounds dumb, but look, that's what I did. That's how it worked out. And we broke through that trend line and retested it from the bottom. Meanwhile, we're forming another one here, just like this one, right? You see a pattern. Look, oh, and again, we test it once, we broke through, we test it once, we break through, right? So there's a pattern here. And look, oh, we're testing that new trend line from the bottom. Okay, here's test 1, here's test 2, test 3, right? And so we're getting multiple connections to that line here. I'm feeling pretty good that that's real, so to speak, that it has been confirmed. I attempted to use this point as my original point for this new trend line. It didn't look good, right? So, it wasn't pretty, it didn't match up, it didn't work. I'm assuming this drop was probably news driven. Often you'll find that if trend lines don't work out perfectly, like in this case, like look at this massive, massive trend line, right? Actually, this is a channel. I had another trend line at the top that works perfectly. I'll draw it now. I don't know why. TradingView sometimes deletes this stuff. We'll just kind of draw something real quick just to give you an idea, right? Sorry for the delay here, folks. But, something like that, right? And I'll go back and edit that later. Thanks TradingView for deleting that line randomly. But you can see here on this breakdown, right? Why touch it so many times perfectly? I mean, look at the accuracy with which we are touching that line and this line just almost to the exact point. And then why breaking through so sloppily here? I remember this very specifically. This is the end of January. This was, as Josh says, the Wuhan zone, right? This was the first Wuhan zone. This was very, very news driven. So you'll notice that sometimes news driven market results can throw off these trend lines. What I think would be normal behavior, it can excite the market, make it behave a little bit more irrationally and a little bit more emotionally, and you saw it kind of jump outside of that trend line, but then look, jump right back into this channel, right, and continue. All right, so I think that's what happened here on this particular mark. I can't quite remember as well as this. I do vividly remember that, but this one can't quite remember. Either way, we've got a new trend line forming here. Look at the insane number of touches. Remember, each candle is 2 hours, so we've got touch here, touch here, touch here, touch here, 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 here. Right? So after like 9 or so bounces off of this trend line, coming into Wednesday night as we approach this new touch, right? What are you thinking, right? Are you going to fight the market? Are you going to say, this is the time, this 11th time that it touches this trend line, this is the one we're going to break down? You don't guess that, right? You either A, take a small position, small, and that's what options are great for, right? Options are like a SWAT team or a SEAL team, and you're a general. And compare that to being a general of a large standing army, right? Shares and normal equities trading is like being a general of large standing armies. Each share is like a soldier, right? And so you have these big positions and you move them forward and you want to maintain most of that chunk, right? You don't want to lose more than 10 or 20%. Even that would seem like a lot of that position, right? Whereas options, in my opinion, this is how I kind of like to look at it, is more like a little SEAL team. Very mobile, very, very powerful. You can have a lot of them, a lot of little ones, kind of doing different things at different times all over the map, so to speak, all over the market. And it's not as big of a deal to lose half of a SEAL team or lose the whole team because you've got so many spread out in so many areas. As a general, it's not as big of a deal. You can still win this war, right, so to speak, make your account go up. So in this case, I'm deploying maybe a couple of small SEAL teams, right, options strategies in the upward direction on the market right here. But because of some other signs that I'll go over maybe in a later video, I did buy some insurance in the form of VXX calls. I believe I bought a 36 strike price call on VXX for about 13 cents, 15 cents, which is really $15, right? Those paid off and more than paid for my calls that I bought with the market, right? So the insurance paid off and then some. So it's always important, think like a general, like I said, make sure you never leave your flank open, right, so to speak, or your backside open. Make sure you've got some kind of insurance, hedge, right? That's when we think of hedge funds. That's what that's all about. It's literally a hedge. And that more than paid for my error, and I was still able to sell those market calls for maybe half of their original value early in the morning of Thursday once I saw that we had broken through this line. Because you got to realize, like, right around here or so, it's probably 11 o'clock at night. So I knew once we broke that line, that's what these trend lines helped me with. I didn't know 100% right, but I knew with a high degree of likelihood that we were going to be moving further south, right? And the chances that we would move back into that channel were less, right? It's not perfect, right? It's not 100%, but it's less likely that we move up. So, okay, I got rid of my call positions, right? Suggesting that we would bounce off this and move upward. sold them for maybe half of their worth. Not a big deal. They were very short term, right? So my expectations are low. You know, it's all about managing your expectations, right? So don't swing for the fences every time. Just make smart, strategic little plays here and there. You know, obviously, um, Josh and other people are much, much smarter about this than I am. So, you know, listen to them. None of this is financial advice. Um, by the way, please consult a financial advisor. What is it? Option trading is extremely risky. You can lose all, if not most of your funds. Please consult a financial advisor. None of this is financial advice. Please make sure your order is right on the screen. Please. Thanks, drive through. When we broke down on Wednesday night and subsequently Thursday morning, I sold my couple of handful of calls and bought more VIX calls, right? Because VIX was still cheap because we had not had a move down in quite some time. In fact, we had been moving up pretty aggressively for so long. So even after this break of this trend line, a lot of people on Thursday morning, they're still not sure. They don't see this trend line, right? A lot of people don't maybe recognize that this is there. They may not recognize that we're going to move down further. So, you know, VIX isn't still super expensive. It had been running up a little bit, but nothing compared to what was to come, right? So I was able to use that to more than make up for my error or my position that didn't make me money, and then make much more after that, right? Those insurance plays that I bought for $15 for VXX 36 strike price calls, this is not a flex or anything, this is just to demonstrate, right? I believe I bought them for $15. They went up as high as 150. So they went up 1,000% overnight, right? That was 1,000% play. Did I sell them for 1,000%? Hell no. No, I sold them earlier than that, so I probably got maybe 80 bucks, 90 bucks out of them or something like that. I'm not pushing it. The whole point was insurance. They did that. They paid for my previous plays and then some. So then I started pulling some of those back in, started closing those for profit, right? All throughout the day, I'm closing more and more. So if that makes any sense, I'm making my risk less and less and less as I see the day trending on and on and on, right? I'm not going to hold everything until 3:50 p.m. just to and hope that everything keeps going down from there, right? So I'm just going to kind of collectively take more and more off the table as the day streamed on. Speaking of trend lines, though, and knowing what to do here and how to react after we broke this, I had another trend line here, right? Now, this one, right, you have more authority to say, you know what, David, this one might be bullshit, this white trend line right here, because we've got what many have termed, let me get a drawing tool up real quick. We've got what many have termed a sort of volatility box right here, right? Check out another great channel called Theo Trade. Theo is in theoretical, I guess. They term this a volatility box, right? And it's not just here, right? It's back here too. It's all this region where we get stuck and we tend to go sideways and just kind of, you know, dribble up and down, right? So this has been going on for quite some time. You can see some interaction with it here, or, you know, jumping around before we come out. And even here, you know, this is that long, long period of time that we just went sideways, you know, up and down for what this seemed like forever, right? This was literally months, weeks. Now we are bouncing on top of that. Now, whether you say, David, you're a genius, you got this trend line perfectly drawn out and it bounced right off of it and then bounced again on it on Friday, or you're just saying, you know, the trend line's just a coincidence and this is just a zone, right? Either way, we know we are approaching a, what's the right way to say this? A median, price mean, right? Notice how in this big drop down, this is about halfway through. Notice how in this big rise up, this is, you know, just approximately right halfway through. This seems to be a mean, and if you were to draw a bell curve, you know, I can't pull it up right this second, but let me get you something here. If you were to draw a bell curve of price, right, this would be the middle, right, and here would be like one standard deviation. I'm just saying, right, just bear with me here, roughly. This seems to be an attraction zone. This seems to be kind of the mean, if you will, in the last several months for our price. And it really has, even back here too. Look how much time and how much volume we spent in this area, right? So keep that in mind here. That's kind of how I'm looking at this. We were just reverting to the mean. We got overextended down, reverted back up. Overextended up, reverting back down, right? And that's the way a lot of people are looking at this that are more quants or more statistician type of traders and investors. What will happen next, right? Well, we don't know, right? We could drift sideways for quite some time on top of this trend line. We could, break through. Now, that's the thing, right? This helps me make my decision. If we break through this and we see maybe like a retest from the bottom, I'm going short, right? This is not financial advice. Don't just do this because I say it. But we're going short, and I am at least. And I'll either be looking out for this sort of thing, like right around here, 28.80, and this pricing isn't exact because I'm using a CFD. But right around here, or what is more likely, I think that trend line is not proven. It literally just has this point and this point, so we don't know if it's even real. But I'll really be looking out for this area right here at the bottom of this volatility box. Will we go there on Monday if we break through? I don't think so. I don't think so, right? That would be another just giant move down like this one. Will it take several weeks? Maybe, right? Maybe. So time frame is important, right? I notice when I say things sometimes I may be referring to the next year or two when it comes to investing or market behavior, and people think, next week or next Monday and Tuesday that's going to play out. Time frame is important. I'm referring to an unidentified time frame here. We don't know how long this will take. If we break through this line, could we make it down here? But this is what I'm looking out for next. Could we go up, right? So we've covered sideways. That's possible. We've covered down. What I'm looking for is a simple break of this top of this volatility box or the top of this trend line, whatever you want to say. Or could we go up, right? Well, yes, we could, I suppose. I don't see that as very likely. I see that as the least likely of all the situations. But yes, yeah, market can do whatever it wants. Please, please remember that. It doesn't have to do anything. And just when you think it has to do something, it will prove you so wrong. All right, so let's say we did go up. I don't think we're going to break back through this trend line here anytime soon. That's just my personal opinion, just based on the past behavior, right? We've been forming trends, breaking through them, and then not being able to break back in, right? Not being able to break back in. Not being able to break back in. So that's what's been happening since this low on March 23rd. So I'm just going to go with that, right? I don't have any reason to suggest otherwise until otherwise happens, okay? We're just trying to use common sense here. So that's where I'm at, right? If you got any thoughts, any suggestions, this is a brand new channel. Brand new, baby. Any thoughts, suggestions, comments, fuck yous, anything like that, put them down below. I'd love to hear from everyone. I'll be reading everything and interacting, of course. I'm excited to get things moving along. What I'll be doing next is I've got a small list here at the bottom. Oh, there it is. A small list of things that I used throughout the early part of the week to determine that this might be the time that we break through. Right now, am I taking crazy plays before we actually break through this trend line? Nope. Nope. No reason to. There's still plenty of time. That people get this idea that you have to get way ahead of the curve. Like Josh says, it's better to be late than wrong. You will either learn that by hearing it from him, or you will learn that by experiencing it over and over and over again. And some of us that are a little bit more hard-headed have experienced that. Even before I've watched his videos, I've experienced that for myself, right? You think you need to be early, you do not. You do not. It is always better to be late than wrong. Here's some of the things I looked at, and this is probably what I'll make a video on. One of the things that stuck out to me the most was a chart I've created that weighs put and calls in a ratio, right? It's just a simple put-call ratio. If you don't know what options are, it's simple. It's literally market bets that were going up versus market bets that were going down, and it's plotted out on a daily chart with a nice even average of that. So it's not just like, jagged movements up and down really quickly because it changes day to day, but it's smoothed out, if you will. It was the lowest I had seen, meaning there was a huge sentiment that we were going up, a huge amount of calls compared to puts. It was the lowest I had seen in the last 5 years at this top. At this top, it stuck out like a sore thumb. When a lot of people think we're moving up, I don't really think too much of it. Okay, whatever. It's only when it seems as if everyone thinks we're moving up, and they're capped. They all think we're going up for sure, 100%. That's when alarm bells started going off, red flags started getting waved, and I thought, you know what, this is fishy. It doesn't mean the next day something's going to happen. It just means be more on edge, be more suspect about this rally. And that was the first thing that caught my eye. I'll show you my chart on that in another video. I also looked at the VIX and the VIVVIX, so the volatility index. And then, if you're not into the market that much, this is going to sound ridiculous, the volatility of the volatility index, the VVIX, those things had all started creeping up in a way that was very identifiable Monday, Tuesday, and Wednesday, right? And I'll show you that, the way I chart that out and look at it. Also, bonds, simple. Bonds have been trending sideways and then more recently moving just down pretty aggressively the week before. And then Monday, Tuesday, Wednesday, they went straight up. And that was just not behavior that we had seen for weeks and weeks and weeks, months. So that was a big thing for me. Also, the expected moves, calling back to that Theo Trade channel, check those guys out. They are big on expected moves. A lot of the stuff I saw recently that they were saying about expected moves was exactly what I had been thinking. We had been, very, what's the right word, efficient, right? We had been staying within the expected move all throughout this period here. Expected moves are just probabilities that are calculated based on the volume of options and the price of options that are being bought, specifically on the SPX, right? So we started breaking out of the expected move to the upside in this area, especially the last 2 weeks, big breakouts. In other words, what the market thought was going to happen, what people thought was going to happen, was just not happening. We were going to be much beyond that to the upside. So that means we're becoming less efficient. Things are getting a little bit more chaotic to the upside, that is. And that sometimes is a sign that just in general, we're going to be moving much more aggressively. Whatever direction we happen to be moving in, we're going to be moving much more aggressively in that direction. So that's something to look out for. And that was really, I think there was one more thing that I was looking at, but I can't think of it right now. So it was like 4 or 5 main things that gave me hints all throughout the week that we might be seeing a breakdown. Like I said, did I know 5 or 6% down or whatever it was? No, I didn't know that. But I did know that sentiment, going back to the put-call ratio, sentiment was higher than I had personally ever seen it since I've been trading for the last few years, that we were going up. And when everyone is so sure, everyone is so sure, that's when we usually change directions. And you better believe down here, this is what happened down here, right? Everyone and their dad, all the articles, all the YouTubers were saying, how low can we go? Have you already pulled out your 401k and your pensions or whatever? We're crashing. It's the end of the world. All the articles said that. Everyone thought that. And that's when we changed directions, right? So I'll be uploading something new probably this weekend, maybe early next week, explaining that. And I'll be doing more technical analysis as we move into the next week. Thanks, everybody. Holla at you later. Peace.